Hi everyone, welcome back to this week Weekly Market Update. Once again, it's been a while. I think I have stopped the video for 2 weeks because I'm actually away out for my own personal stuff. But I did actually do some update on and off in my Telegram group. If let's say you have joined me over there as well, because it actually takes some time, to do video recording instead to upload over there. So if there's any critical informations that I would like to share out or things to watch out for or good relevant news, right, I will just directly hit into the Telegram group. Hopefully you get the first news as well. So I'm still with you guys, not to worry, because that is my passion of doing it. So hopefully you guys enjoyed this video as well. So many things to go through. Even though I didn't update my video, doesn't mean I stay away from the market. All right. Uh, I am still looking at what is happening on the market itself, especially for last week. What is happening? We can see that down actually for 300 points, but that is a day before when the market actually ready, right? A lot of people assumes that market turns good. All right. Eventually it will be going higher and higher, but the thing is that we know what is happening in the market right now in the broader view, right? Inflation rate is there. Fed is going to hike more rate going forward, especially on what happened on the non-farm payroll result last Friday. So this is what happened is that the US stocks like on Friday closed the week lower, mainly due to the non-farm payroll, because it's higher than what the expected uh, data is. So it's actually added 390,000 of jobs instead of 328,000 that which is expected. So what does it mean? It means that right now, good news is actually the bad news at this point of time. What do we mean by that? Okay, because at current situation, we know that if let's say the economy data is doing good, these give the reasons for Fed to have more rate hikes going forward. Correct? Or not? So more rate hike is actually bad for the equity markets. Correct? Or not? That's why good news is actually the bad news itself. So that is what causes the market to actually drop on Friday itself. It's just a reverse on the Thursday before that. All right, so there's the things to watch. Things that actually happened on last Friday when we actually say that hike of rate, all right, or increase of the interest rate, right, the biggest uh impact on the three major indices, Dow Jones, S&P, Nasdaq. Nasdaq technology sector will be the highest that actually be impact on the economy itself. All right, so why that's why you see that the technology shares actually retreated on Friday, due to the worry on this raising rate itself. So Microns, Nvidias, all the mega caps, that company actually drop off. And one things which actually affect the market is Tesla shares. Why? Because Elon Musk actually wanted to cut 10% job at a car maker there. That is kind of like very contradict to what is happening to their company itself. Firstly, we know that there's Elon Musk. There's a lot of car going to produce. They actually set up a China company in Shanghai. I think in China as well. They need more manpower instead. All right, because they need to produce more car because they are actually a manufacturing company after all. But they he mentions that he want to cut 10% job. Then who is going to build a car? Definitely, when we say that cutting jobs, reduce manpower, reduce headcount is actually a savings to the company. They will actually have a better earnings for the next quarter. But it also eventually bring that there will be a low producers of their cars as well. It also affect their statement, right? Their next earnings statements. So that is like kind of like contradicts, and it also say that must also say that there's a super bad feeling about the economy. All right, he said that right now economy is actually at a high side. More inflation rate is coming in, so that is why Tesla shares actually dropped 9.2% instead of going up, even though he cut the jobs headcount, right? So this is the thing to watch out for. Okay, for the coming weeks, right? So this is what happened last week. So for the coming weeks, I think it's on the Fed. There's a CPI earnings data on Friday itself. Let's take a look. I think on Friday itself. Yes, so there's a consumer price index. This will tell us what is the inflation likely to be for the coming months. All right, so that is the things to watch out for. Of course, earnings still kick in. Last week, Microsoft lowers its guidance on revenue. The market plunged, but eventually recover during the market hours, right? Luckily, it come back. Salesforce, good, jump up, kept up, but also come back as well. So a lot of earnings will be impacted, and they have been provide profit guidance just to tame you off, all right, just to be watch out, not to be over bullish on this economy at this point of time. So I don't want to blabber too long. I just want to go in directly to the chart, just have a quick update for you guys and for me as well. So what is happening? This is what I shared in my Telegram group. If let's say you are inside, so basically, on the 27th May, I think I write in the Telegram. I say that flow with the trend, wait for the dick cat bounce. So this is the bounce, right? I mentioned. So we can take based on the daily chart. Okay, so 27th May is somewhere here. All right, wait for the dick cat bounce to go higher. After all, more rate hike coming up. All right, so second area, this area is a good area, a good price for you guys to monitor and do some shorting if you want. All right, ultimately we know that the trend that we have previously is over. This is the uptrend. All right, and this is the downtrend right now we are at. So when we are at the downtrend, we just follow the trend. What do I mean by that? We short where the trend is actually at a high side, and then we long if let's say it's the long low side, right? But right now trend is lower, so our only direction is we are looking to short when the market rebounds higher, and then we shut it down. And that is why in the Telegram group I actually shared you guys 3 arrow, 3 points to watch out, 3 price to watch out. Firstly is the 33,000 significance level, 34.5, and then followed by 34,000. All right, so 34.5 is actually a midpoint. 34 and 33 act as a round figure psychological level. All right, so 34.5, 34,000 is for you to enter. 33.5, 33.5 is somewhere here. All right, in the mid place, then here and here. That's why basically I draw these 3 arrows that stand for something, right? So why is this 34.5, right? Is actually getting out of the so-called the bear trend, because it's out of the channel, right? So this is actually a very so-called the high side. If let's say it's really hit here, you either liquidate your position, stop your positions, re-strategize, or otherwise you might got burned, all right? You might actually wait for some bounce, then go higher. But at this current situation, I don't think it will actually break above 34, 35. All right, at this situation, it's very hard. Okay, so what happens over here? Because we are actually at the low side, a lot of shares right now is at dirt cheap valuations. If you go to those kind of big company like Shopify, like Amazon's, like Facebook, like even for Apple drop below 150, it's very attractive to catch those prices, and that is why causes the market to hike up previously. All right, it's not because the change or the economy stance point of view, the inflation rate is getting better. No, I believe it's more on the retailer side trying to buy at the dip, buy at the low, but low there is always lower, right? So just to watch out. So this is the 3 point which I shared. You guys may actually look into it if you wanted to do some shorting, to do some hedging as well. So for Nasdaq, right? Okay, one more thing just to take note. Take note. Since the 2019, right? I mean 2019, I think it's March or 2020. When the start of the COVID, right? We till the dates of the highest, we are not really actually at the 50% drop off point for Dow Jones and S&P yet. 50% is around maybe 28,000. It's not any near yet, so there is still room for it to drop. But of course, ultimately 30,000 is the first level we need to watch out if you are more at the bear side. Okay. Next thing, why I purposely mentioned that before I switch to the next counter is because we know that Nasdaq is heavily depend on the rate itself. So we can see that for Nasdaq, right, it's actually dropped at the 50% Fibonacci point right now. Okay, you see that? All right, so this is what I said previously. As usual, I never erase all what I wrote. So 20 March, watch out. It might go to 11,500. Watch out for once 12,500 break, it might go there. Watch the 50% Fibo. So it actually touches the 50% Fibo, and then it bounce back. You guys see that? Right, this line is a 50% Fibo bounce and then it bounce back. Okay, but ultimately we are still at the downside. All right, so if you wanted to short here, then your risk will be higher. If you wait for a good decent pullback, this is where you can look at 61.8%, your first shorting point, or otherwise you wait for the retracement of the trend. All right, somewhere here, then you got it out. Okay, why I say that, why I don't buy, all right, there's also a question why I don't buy at current stage. Because like I said, we follow the trend, right? Trend is your friend. I mean, I can do some anti-trend trade if I want to, which I did that, which I mentioned in Telegram as well sometimes. But overall, this is a short-term profit. You need to monitor the market. If you are more on the swing trading positions, right, you know that this is the flow. Wait for it to come higher, we flow with it. Unless it break, that is another story. Otherwise, we just flow with the trend. Okay, this is how you trade. Next thing to watch out. Let's go to, let me see what else I need. Okay, small cap. Small cap. I mean, the three major cap is same thing. Bounce back, shut it down. Bounce back, shut it down. Okay, for small cap, okay, so this is what I mentioned previously. 30 April, RUT failed to recover back to this previous support area, 22,130. All right, 2100. So 2100 is somewhere, is 30 April, is here. Okay, it's here. Okay, it failed to recover back to its previous support area, 2130 is here. So small cap will suffer with its brother. Along with his brother, the three major index, we shall see next support as 17,050. All right, 1750. So you can see it actually reached 1750 and then bounce off. Okay, so that's why I say that it's easier for you to trade. If let's say it's down, it's easier for you to trade with a trend because it move quite stable and fast when it actually flow with it. Otherwise, if let's say you see that you are trading with trend, right, you go anti-trend today, it might bounce up today, tomorrow it come down already. So don't be too happy if you're doing and counter trend trading. Any profit that it bounce up, just take it because the overall trend is down. All right, take note. Next counter we are going to look into is actually oil. Oil futures. Okay, so for oil, right? Oops. Which one did I see? Hold on 1 second. I I think I did Namex, so okay, well, whichever. But anyway, because I dropped previously, so I'm trying to find out where did I draw it on to. Then it's easier for me. Okay, so it's here. So this is what I have previously mentioned on brand. Uh, few point to take. I think it's not this one, but anyway, it's okay. Let's continue. So right now for oil, right, we know that what is happening. The deal between Saudi Arabia, between OPEC, all right, between Russia, the war is still there. I think oil have some movement. The drop, the gap down. This is between due to the increase. All right, they increase the supply from Saudi Arabia. Okay, you can Google it. They increase the supply, cause the market because when there's more supply, the price will drop, right? But I think the second day there's some things issue on the Russia side, and that is why the market go even higher. But ultimately, we are still at the uptrend. Okay, so if you want, don't go for short, right with the trend, pull back, long it up. All right, next counter, just want to bring to your attention, is actually XLU. XLU is actually a utility ETF. We come back to XLU again. All right, XLU is safe when you think the market is too high. Come to the support line. This is previously we mentioned. All right, we traded this once again. We are actually riding on the trend at this point of time. You can see we are riding on the trend at this point of time. All right, nice channel. Okay, but things to watch out right now. Why I want to purposely mention XLU is because we know that utility is also sensitive to higher interest rate. All right, their debt equipments. So when the rate go up, their debt go up. And it's not good to their earnings statements for utility company. Okay, next thing to watch out for, this is the top. All right, we say this is the second top. It's riding up, volume is coming down. Okay, So this is why I say pay special attention to XLU. There might be some opportunity for you to ride counter trend at this point of time. Okay, there might be some opportunity for you to ride counter trend at this point of time. So just do some resistance support at the high, at the top, whichever you want. Let's draw. I haven't do any drawing, so let's draw together. All right, we shall see this one first. Okay, so if let's say we are trading with the channel itself, the volume actually supported. Okay, this is the higher of the previous high. Okay, lower of the previous low. We know that it might actually be forming symmetrical triangle, or we might be actually trading on the parallel line as well. Okay, parallel line, whichever, but ultimately we are at the top boundary. All right, top boundary, which is a good area for you to go down. All right, so that is why I say pay special attention to XLU, put into your watch list if you want to. All right, so this is what I shared one into your watch list for next week or couple of weeks to watch out for. All right, next counter, I think which I mentioned in my telegram, I've kept supporting in Hong Kong shares, Chinese related company shares. Basically it's due to Chinese government unlock their COVID, right? Easy on their COVID close, I mean the block, correct or not? So they actually open up in the Shanghai, if I'm not wrong. Partial open is also a good news to them as well. So this actually bring the hype for Hang Seng, the China index. You see the market actually go down, but like China A50. So where is it? On, can you see? It actually shoot higher, came down. Came down is okay. I'm totally fine because when you want to break a resistance, you want to break some resistance. It's not like one day or one kind thing. All right, it takes some hurdle for it to go higher. So it's okay as long as it's deep penetrate, showing some sign that people is buying into it. All right, people is buying into it. The close is not that bad. It's not cut. It's not encarving. There's no nothing. So for candlestick itself, on the daily basis, I'm still kind of like prefer them doing so as well. So just to watch out. If let's say it break, then you remember to cut. All right, it's all about probability, like I say. So same goes to Hang Seng Index if you want to. Same goes to Tencent, this kind of big company. Next counter, we will be looking at QQQ. All right, technology company. Can you see? We may see further dip to 50% FIBO around 2090, 290. So it really hit. This is 30 April. 30 April, we are here. All right, gentlemen. 30 April, we are here. I foresee that it may go here. All right, the next support level based on the FIBO, 50%. Okay, I just want to clarify something. When I draw a FIBO, right, it doesn't mean that it will definitely hit this resistance or this support or go to the next resistance. There's always some other criteria that actually join in the forces to bring it to come down. All right, so I might not touch on those kind of forces because it need more in-depth reading up or based on some intermarket correlations or whichever. But I just draw it because I think that if let's say the market is actually on the downside, you have to have some level where to watch out, where to take your profit, where to cut, and that is why I draw FIBO for layman term to understand. All right, but I will always come whether it's actually the upside or the downside itself. Okay, so hopefully I clarify on the FIBO on how I using it. Next thing, too many counter. Just want to mention some BTC, another asset, Bitcoin. So for Bitcoin, right, I kind of like worried people who are actually speculating on it right now. This is what I mentioned, right? Hovering, go up. So we need to see some similar sideway before you go up. True or not? So right now it's very crucial for Bitcoin. Firstly, we are at the 30,000 area. Firstly, we are at 30,000 area. People who are our Bitcoin, take note, we are at the 30,000 area. Second, we are fluctuating. It shows some sign of support. All right, but in order to clear, all right, in order for it to clear, we need to see volume to pick it up. Okay, we need to see volume when it rebounds back. If we don't see volume, this might be a continuous pattern. What do I mean by continuous pattern? Down, flat, down, flat, down. All right, this might be a continuous pattern, and this 30,000 act as a psychological level support at this point of time. When it actually come down, it can be a resistance level next. Can you see that? Okay, so for Bitcoin user, for cryptocurrency user, I know right now we have many bad news or coin right now, especially after the Luna incidents. All right, if you don't know what is Luna, go read it up. All right, it caused many people bleed, killing many people, go bankrupt. So 30,000 if you are risk averse. All right, if you want to pick it up on Bitcoin, cryptocurrency, watch out. First layer, second layer is your stop loss. If you want to long at this point of time, break these two levels, please run. All right, please run. Okay, not walk, please run. Okay, so for me, I still want to see this level, whichever breakout, I may continue the forces. All right, so there's two ways. You can pick it up right now, stop here. You can wait for the breakout strategy. It's more confirmation. Of course, the mid is lesser. But right now, we are actually at a very crucial point for Bitcoin. Okay, so take note if you are cryptocurrency player. Okay, take note of Bitcoin. Lastly, just want to share one last counter. It's almost 20 minutes. There's too many to share, but of course, I try to cover the major outlook first. Where is the trend like? For individual counter, I cover oil. All right, it's more on the upside. Cover on indices, it's more on the downside. There might be some big cap bounce, but we are still overall on the downside. I cover the small cap. I cover the China A50. All right, Hang Seng Index. So why I'm looking at Chinese company, I think it's the reopen. There's some changes over here. Uh, this is Hang Seng. Broader view since 1993, we are actually break below the downside. All right, we break below the downside. Or if let's say I don't want to break, I can actually draw slightly lower, right? Correct or not? Okay. So if let's say this candle close above by next 2 weeks, we are actually following the trend buying at the lower boundary. Following the trend buying at the lower boundary. For Hang Seng Index, 20,000 to 22,000 is a psychological level. All right, it's a psychological level. So, all right, this 2,000 area is a psychological level. So, if there's any chances it bounce back above 22,000, we shall continue to see. Okay, of course, overall market isn't good, but this is why I see that there might be a change of flow in the liquidity market on the money flow itself. People is getting out from the US. They need to pump the money somewhere else. I think Hang Seng Hong Kong, Hang Seng Hong Kong, China A50 or the China economy might be the next leg. Maybe there's many big bullish over there, but definitely they might have some small bullish coming up. All right, so this is means that we are actually buying at the uptrend of the lower boundary. If you don't pick it up, you want to wait for the market to come up here and then you buy it up, it's too late lah, guys, gentlemen. All right, a lot of people asking me, where the price go up, should I buy now? Will it come back? I say, why you don't buy it now? Why you don't wait for the reverse? Always wait for reversals. Always for reversals. That means what I mean. Go up, reversals coming down. How will I know? Will there be any reversals? I wouldn't know. Correct? I wouldn't know whether will go up. But I think that is a chances. If let's say you're betting on any other instrument right now, a long shot blindly following, I think this is more relevant for you to just risk on it as well. Since you're risking on other asset without knowing what is happening, why not risk on something concrete, a little bit more concrete? This is a money chart. Looking at a weekly chart, all right, there's a gap up. Can you see that or not? There's a gap up because Chinese, I think they reduce on the regulation or whichever they want to bring up or the open up border reopen up actually makes some good news on the Chinese side. And on the earnings report for Baba, Pinduoduo, all the tech company is doing well, all right, for last quarter, if I'm not wrong. So there is some changes over here. So for that correlated, I'm actually into our local company, this ETF funds. It's called HST. All right, it's an ETF funds. So I'm actually eyeing to buy it up on this counter because this counter not just Tencent is inclusive of many technology company, Tencent, Baba, JD, Kuaishou, a lot of stuff. All right, you can guys can go and read the prospectus if you want to. I think it's showing some good sign to buy it on. So that is why I actually have specially mentioned on this counter today. So if you ask me, yes, I'm inside. But what price did I buy in? I just bought it recently when there's a breakout. I feel there's a breakout. I bought it at 750. All right, I bought it at 750. So I'm no way any better than you if let's say market is going to drop back. Okay, but to me, this is like a midterms trading. I can hold. If you want to use leverage account, just be aware. But otherwise, I am good to hold because I do my correct sizing positions. I don't overtrade. I feel comfortable even though it dropped a 10-20%. I'm totally fine with that. So take note when you want to pick the bottom, don't use leverage account. All right. So that's all for HST. Let me see what else. Okay, I think I don't want to cover too much. Just a comeback from to the market. So that's all for this really market update. Hopefully you guys enjoyed. Remember to join my Telegram group if you haven't too, because sometimes I wanted to update you guys. For people who are in my Facebook but not in my Telegram, it's hard for me to reach out to every one of you. So I really want you guys to be benefit from this video because you spend some time listening to it. Some takeaway. I don't want you guys to waste your time. Or so sorry, last counter. Last counter. If you are holding till now, thanks for that. Last counter is actually this Chewy. Chewy, if you don't know what this company doing, please go and Google. I just want to specially mention on it because of the high volume. All right, because of the high volume, high closing price on the day before. Eventually Friday the pricing not good, the closing for the major index not good, but it remain. All right, resilience. So why? Because many of the earnings report, okay, the earnings report better than the expectations, way better. So and why I mention on this, right? There's some so called we are at the bottom of it. All right, can you see? This is the money chart. We are at the bottom of it. They we are still at the bottom of it. Okay, so this is a good bottom line pickup. This is what I draw previously lah. All right, the chart. So this is a good bottom pickup counter. Of course, it's the anti-trend, but I give it to this counter is because mainly of the heavy volume that came in. So I think there's more chances that you might rebound back to somewhere here, $35. All right. So there's some meat left in this environment right now. So if you want, you can consider, and then it's just catch up of the moving averages. Okay, so that is one another counter for you guys to put into your watch list if you want to. All right, ultimately we are still at the downtrend. You are doing anti-trend trade. Manage your risk wisely. All right, don't dump all the basket. Don't dump all your watches into it. Manage wisely. All right, that's all for this week. Thank you everyone. Hope you guys enjoy. Bye bye.